So welcome everyone to this Government 365 webinar with Paul Roberts on financial pitfalls in an organisation. So in terms of asking any questions, just put them in the Q&A or the chat and I'll just keep an eye on them and I'll address them when we get them. Before we get started, just wanted to share what Government 365 does. So our purpose really is to amplify collective potential. And what that means is really to help ensure the executive team and the board are aligned and focused on the areas that will deliver sustainable value for the business beyond just profit. Through our personal approach and software platform, we firstly aim to get the whole team, so the board and the executive team, to understand and align on the organisation's current state. Then we get you aligned on the key focus areas that will add the most value. And then we partner with you to help you unlock that through our coaching and resources. So we go beyond the boardroom, beyond a just profit focus. We're also running an initiative at the moment called Pay It Forward, where we're helping to get corporates to contribute 50% of the cost of an annual subscription, and Government 365 will contribute the balance for a charity to go through the process for a year. So if you know any corporates that would like to be sponsors or charities that will benefit, then let me know. And I'll put the link into the chat. Let me just do that now. Yep, so it's on there now if anyone wants to look at that. Yeah, one of the areas we help you understand is financial stewardship. So the biggest reasons companies fail tends to be linked to finances, running out of cash, becoming insolvent, poor investments, lack of scrutiny, or monitoring of expenses. Many famous cases have come to court where a director has relied on the advice of someone either inside or outside the organisation without doing their own due diligence and come unstuck. Just to be transparent, I've worked with Paul for 8 years at Mars. He was part of the team that helped the organisation win Best Place to Work in Connect Awards 3 times. He had one of the highest team engagement scores in Mars globally and was a CFO who was not afraid to identify risks or highlight investment opportunities across the organisation. He now works as a virtual CFO with various charities, small and medium-sized businesses, to help them not only from a financial perspective, but to challenge their business strategy and decisions to create value and reduce risk. So welcome, Paul. Fantastic to have you on the webinar.
Thanks, Gerry. Thanks for the invitation.
That's great. So maybe just start in terms of explaining what you do and why you set out 4 years ago to do what you do today.
Yeah, so I think on my background, I've got over 30 years, scarily 30 years of experience in commercial finance roles. And what I'm aware of is that larger organizations can invest in CFO roles, which give them a bit of a, I suppose, a competitive advantage in delivering strategy. They've got someone to support their organization, I suppose, giving a visual or vision of what their strategy will deliver financially. Also ensuring that their controls and governance is in place to meet the needs of the organization. I think what I've realized is, my background previous to large corporates was in sort of SME space. And that SME space, I think, is a bit of a challenge. Some really strong financial people providing data, but probably a lack of governance and oversight at a CFO level. And one of the challenges in the SME space is the affordability of a CFO. So the term virtual CFO comes into play on the basis of virtual seems to imply that we're not actually there, but we sit alongside or come in on a part-time basis, make it affordable for an organization, maybe a slightly smaller organization or in that SME space, to have the skills of a CFO to sit alongside their existing finance function, maybe between the rest of the leadership team or the board and the finance function, to give them the benefits of that CFO without the full cost of a full-time person. So I see that there's been a gap, and actually I've been pretty busy and pretty fully occupied in the last 4 years. So there's definitely some opportunity there.
Yeah. So linked to that, if you think about some of the recurring areas of opportunity you uncover, what sort of things are they?
Yeah, I think one of the biggest opportunities, when I go into an organization, I'll tend to spend some time talking to the leadership team about what they are looking for from their finance team, ask some questions around what they see as positives from the finance team, maybe what the gaps are as well, what they would like to see, and quite often what the frustrations are. And often I see that the opportunity is actually changing the focus of finance from being sort of a group that looks in the rearview mirror. So very good at producing management accounts, stat accounts. Obviously, there is an obligation for statutory compliance, but generally the information that's being provided is rearview mirror stuff. And where I see opportunity is actually to change that to a role where finance starts to look forward, or more forward focused, and actually starts to provide, I suppose, insight and thoughts about what the future may look like based off of that historical data. I think the other thing is we have a role in finance, or there's a role in finance to ensure custodianship. So ensuring that we're meeting our obligations from a statutory point of view, making sure that controls are in place to mitigate as much risk as possible. But there should be equal, and I'd argue in some cases, more focus on the co-piloting side of it. So sitting alongside the organization to add value and help drive growth. The way I look at it is, I work for a couple of not-for-profits in the healthcare area. And the way I look at it, if finance can free up an hour of a nurse's time to not have to focus on some administration or some finance tasks in the custodian space, so that they can actually spend that hour with a patient, that's incredibly good value and return on investment for the finance function. I think there's an opportunity as well to see finance as a part of the organization that can help drive profit and growth. We're often seen as business prevention officers, and what we should be is actually business creation officers. And I like to think there's a sort of continuum around how finance should be working with the organization. And I find a lot of organizations, the finance function is really focused on providing information. So could be monthly reports, could be a whole deck of data. There's not so much in the way of insights. And to me, the next step, the sort of stepping stone approach, which is that we need to start providing insights from that data. Management's time is valuable. Actually, if we can focus people on, and the board, focus them down on the important areas, then that's the first step. After that, it's about thinking about what are the actionable insights. So we've got some insights. Well, which of those insights can we do something about that could actually drive some growth or some additional profit, reduce risk, whatever it may be? And starting to highlight those is, to me, the next step on that continuum. And the final step is, to me, is actually, well, how do we make those actioned insights? So moving away from actionable to actually actioned insights. So we play a role in finance, or we should, in making sure that the business is focusing on those insights that can provide additional growth or additional profit, that we're going to deliver on that, and that we've got the reporting in place to actually check on progress, and we're monitoring that those insights are actually being actioned. So it's a question for you, Gerry. I mean, you and Govern 365 do a lot of work with boards and management teams around governance. What is it you see and you think you see as areas of opportunity?
I think I probably see a lot of companies, I see the finance team not as included in the strategy. There are maybe I wouldn't say a separate area that's providing, putting information in, but not necessarily owning the strategy as part of the team. So I do agree with, what I do see is lots of reports, balance sheets, covenants, P&Ls, a whole load of information. And I find that what's missing a lot of the time is the story. So they might have commentary, but I'm more interested in what's this telling me? What's the story, so that I don't have to spend a whole load of time doing. If you can give me the story, then I can go to, so what are we doing about that, and what's worth spending time on? Because I think boards are really busy.
Yeah.
The jobs are complex. They're becoming more complex. So the easier it is for you to hone in on the things that are most important, biggest priorities, biggest opportunities for value, then you're not wasting people's time. So to me, it's that finance can play that role, and actually play a role of suggesting areas, which is I thought an area you did quite well. You would challenge around, should we be spending more in marketing?
Mhm.
Not many finance people would do that. It's pretty unusual. But if you're part of the leadership team and you're an equal part of the leadership team, then you should be looking at how do I play a part in accelerating the strategy or reducing some of the risks. So that's probably one of the things I see, and I agree with that. There's not many companies that really have actionable insights or follow through to become actioned insights. So yeah,
it's interesting. I mean, your point there around looking at opportunities to grow quicker, and I remember some of the conversations with the marketing team. Well, if it's such a big opportunity, how do we go faster? How do we go bigger? Because actually may not be in the budget, but actually neither is the additional sales or the additional top line that's going to deliver. So if you look at the project as a whole, and I think finance have got that role to play to actually challenge, the opportunities that are not being taken or the opportunities that could be bigger. I think if I continue the theme as well, I think the other thing about finance is quite often the finance team themselves don't see themselves as part of the organization. It's almost like we're kept to one side. So I've been in clients where literally the finance team is invisible. We're behind, or in a closed environment behind frosted glass, because there's a perception that we have all this secret data that we don't want anybody else to see. And that creates this barrier. And if you can break down that barrier and be seen to be supportive and co-piloting the organization and get the finance team to understand there's a role to play in being in the organization amongst the rest of the business, I think it's a big win for all. And I see that once that happens and those barriers are broken down, people come and ask questions, and actually that in itself removes a significant level of risk in an organization, because all those things that aren't mentioned or aren't talked about or aren't discussed because, well, we won't go and talk to finance, suddenly become more open, and finance become much more knowing about what's going on in the wider organization too.
Yeah, so you're really talking cultural, change,
Yes.
affecting the culture, and what you talked about at the beginning was, the first thing you do is you go in and listen and you ask questions. So you're not looking at the systems or the processes. You're trying to understand what does success look like, and when you do that with the CEO and the various other people leadership team, do you find sometimes that you're getting different answers? So there's lack of alignment.
Yeah, I think where the lack of alignment generally sits is what finance think is required is not what management require, and then next stage up is not what the board requires either. So I've been in roles or been into organisations where I hear from finance, "Oh, we can't do that because the board won't let us, or the finance committee element of the board don't want to do that." And then I talk to the finance committee, and they will be, "Well, we don't know anything about that, and that's not where we sit in terms of the organisation." So there's this misalignment between what's wanted and what's needed, because finance haven't been in the organisation to ask those questions, or don't have the comfort or confidence to do so. And I think a role like a CFO role can bridge that gap and challenge the status quo, challenge the thinking. But quite often, I was thinking about some of the frustrations that I see, and I'll talk to someone in the organisation, and their frustration is, "Oh, I've got to fill in 3 different forms to get, to be able to book a flight." And I talk to the finance team, and their frustration is people don't want to fill in 3 forms to book a flight. And actually, from a control point of view, what are we trying to control here? And why aren't we talking about why is this barrier? Why does this barrier exist? It's a small example, but that sort of exists in various places. I want reports on A, B, C, D, and E. And the finance team not maybe understanding why that's so important, because they're not close enough to the organisation or the business and what it does.
So you're saying there's essentially a missing skill set around just asking questions and listening, and getting clarity as to what people want. And if you got that, you can potentially shortcut some work and simplify some work.
Yes.
Yeah,
and it builds that trust, and I think that's one of the things that there are often some red flags that I see as I go into organisations that give me some element of concern, or I see them as elements of opportunity. And I think the first one I would say on that is the level of frustration that I see between leadership and finance around the role that finance is playing in the organization. That can be quite challenging. And when I hear that frustration, I start to dig a bit deeper as to why. And often it's around the accuracy, timeliness, and reliability of data. So if a board is spending all their time questioning why a number is a number rather than sort of evaluating what that means in terms of the organization, or even being told what that means, they're focusing in the wrong space. But that builds frustration and lack of trust. So I think that can be one area or one red flag. And what that then looks like is quite often the board is involved at the wrong level in the organization. So I've been in places where, as an example, members of the board were trying to manage the audit because they didn't trust that the finance team were able to do that. So actually coming down into the organization rather than solving the problem and sort of sitting with management and saying, well, this is what we're seeing. They're actually coming into the organization into a management level role, which is far from ideal for all concerned, if I'm honest. And I think the other thing is, the other red flag to me is, that lack of future focus reporting, because, and I think you alluded to it, things like covenants and, just cash flow management. The number of organizations, it's amazing how frequently I go into organizations and they don't know what the future looks like. And either they know that they've missed a covenant when they've done it, or they're suddenly rushing around on a Friday afternoon to get an overdraft facility in place because they need additional cash resources because they can't see that coming, or they've not been able to put in place change the way they're operating to be able to not miss the covenant or ensure that they can manage their cash effectively. So to me, again, that's a red flag where finance aren't delivering in their role to actually reduce risk and visibility to the board and to management around what's really important.
Yeah, the other one I see, which links to that, is where you have a trend which might be overspending in an area, and then the forecast will say we're going to be back on track for the rest of the year.
Yeah.
And I'm going, tell me more about that. Help me understand why you're suddenly going to get back on track. I see that a lot with forecasts where, whether we're being overly optimistic. So I'm interested in your view on, going into organizations where you see a trend that's not right, and then it's suddenly going to be fine for the rest of the year. Is that a red flag in itself? Without any insight?
It is. I think, but again, that's back to the role of finance. If you think about actionable insights or insights, is flagging those areas so that you're not having, as a member of the board or an advisory board, not having to trawl through the numbers yourself and go, which of these things look odd? So, or if you're the CEO, that you've been given a highlighted deck where you can go, well, actually, this is what I need to talk to with the marketing director or with the sales director, because this is where I can see there's a challenge. So, the current trend is that we're 5% down. We're 9 months through a 12-month year, and the prediction is that on a full year basis we're going to be 10% up. Well, how does that work? It's not necessarily up to finance to solve the problem, but it's up to finance often to sort of at least raise that and to have a view of whether the reasoning is valid. And there may be some reason, but again, that's part about being involved with the whole organization.
And that's probably a good one, because when I look at, we had a guy who looked at why businesses fail in New Zealand, and one of the examples was a company that was going well in New Zealand, decided to expand overseas, Pumpkin Patch, and had a forecast for the US that was sort of going like that, heading north. And obviously it didn't play out, so their overly optimistic forecast was way over, which meant that they were then buying a whole load of stock, a whole load of stuff that follows through. And so in terms of things like that, I mean, you could say as a finance person, well, that's a salesperson's job to put that forecast in. I'm just entering those numbers into the spreadsheet. What should be the role of finance custodian in that instance, and probably the rest of the leadership team, I'd say as well. So
yeah. Well, again, I think to me, there's, and again, having gone through this with you in the past, with finance understanding where the numbers come from and how the numbers are produced is really, really important. So if we're blowing out, so the other thing I'd say is quite often organizations have a real focus on profit and loss and not so much focus on working capital. And where the problem sits is in working capital. So your example there, suddenly overstocked. And the question is not necessarily, well, you know, we're overstocked, what do we do about the stock? It's actually, well, how have we got to that position? And again, I see finance maybe don't fully understand the process to how that's happened, because they don't understand that it's driven by a forecast that's produced by sales, ultimately maybe 3 months prior. They don't understand the full end-to-end process to be able to start to challenge the thinking behind that. Now, it'll take a while for that to unwind, but how do you ensure that we stop the continued challenges? All right, we may have to solve the overstocking issue, but we also need to prevent that continuing.
yeah,
So I think finance do have a role in that, in understanding the process. Yeah, and part of that will show in the future-based forecasting. You know, we should be doing a cash flow forecast based off of an inventory number. Well, how do we understand what that inventory number is? We can make it up in finance, or we can go back to source documents and go, well, actually, this should be coming from a forecast in sales. Do we believe that forecast?
yeah,
How are we tracking that at top level, maybe, before we go into the level of detail? How do we look and say, well, does that make sense at an overall trend point of view? You know, and I think, again, from history, we've seen where, you know, we've seen sales, I've seen sales forecasts which just don't mirror the trend. And quite often that's because of the complexity around the sales forecasting model, where you're forecasting it against multiple smaller customers. When you roll that up, you know, at individual customer level, it seems to make sense. But when you roll it up to the top level, it just doesn't make sense at all.
yeah,
So being able to challenge that from a top level helicopter view, if you like, to be able to say, well, yeah, something's not right here. And if we continue this trend, we're going to continue to drive the same behavior in terms of inventory levels.
yeah,
Particularly in New Zealand. The other thing I'll say is we're a long way from a lot of parts of the world in terms of inventory, and the supply chain can be so long that working capital management is vital, because once it's on the water and it's on its way, you can't do anything about that.
yeah,
And in some cases, that could be, you know, 12 weeks, 3 months before you can actually start to influence that inventory level going forward, which is a massive impact on your cash flow.
yeah. And you talked about it a minute ago, as around the assumption. So going right back to the beginning of that process, and you know, it's not a precise science, but if you're launching a new product and there's no history, you know, how do you know, is it making really clear what the assumptions I'm based on? So how would I, how do I judge this, you know, as a leadership team member, finance CFO? What questions should I be asking to say, you know, how valid is this forecast? And also, is there a process around what if it was 50% less? You know,
Yeah.
do we look at other scenarios to just test what it was 50% more? You know, could we get more stock or whatever? You know, so how much
Yeah.
effort should we put into those sorts of types of questions?
Yeah, I think that's valid. I think the other thing to understand is what are the implications if, you know, if we've got it wrong by a significant amount. You know, is it going to bankrupt the business? So understanding the risk, and ultimately, you know, if you've, and this comes into the discussion, well, actually, if we get it wrong and we don't sell as much as we thought, is that going to give us a long-term problem, or actually it'll sell through anyway? We've got the cash flow to be able to do that. It's worth the risk given the potential size of the opportunity. So I think that needs to be weighed up as well. But yeah, you're right. I mean, what information is out there could be historical data around similar launches, could be, you know, just again, does that make sense given similar opportunities or similar products in the marketplace? And finance have a role to play to, yeah, challenge that thinking. Yeah, and I'd say it's being suitably, I suppose, asking the right questions. You know, you may not know, and part of the thing I used to say is I'll ask the question because I'm interested, I want to know, but it's forcing people to think about what that answer is. Yeah, why would you expect this to happen when this has happened in the past?
Yeah,
Why are you so optimistic or pessimistic about this opportunity when you've got history that shows something different.
Yeah.
Yeah.
One of the things I've seen from a bit of research recently around diversity of thought around a team is sometimes we all think the same way in terms of how we try and solve a problem, and there's bringing other frameworks like Edward de Bono's six thinking hats.
Yeah.
I think you were very good at this. Is what could go wrong here? What's the worst case that could happen? Or what if this was significantly better than we thought? Well, what then? So it's probably pushing those boundaries and asking some maybe different questions. What other information do we need here that will give us more confidence? So probably just trying to stretch the thinking in terms of outside of yes, I believe it, or no, I don't. So different frameworks. Yeah.
I think the other challenge in that space from a leadership team and probably even more so from a board point of view is the groupthink. And you sort of touched on it there. And I think it's a real challenge for organizations where there's not an environment where someone can come up with an alternative view or an alternative point for discussion. And I think that creates significant risk in an organization where there's where that groupthink is. And even down to voting and discussing things. Actually, if it's a hands up vote, are you going to be the one person that votes against when everybody else has voted for, even if you think strongly that it's the wrong decision? And I think where I've been in strong environments where we've worked together in the past, there's been that absolute freedom to be able to say, well, hang on a minute, this is an alternative view. Can we just discuss it so that we feel comfortable that at least everything's been put on the table? It's a real watch out for boards, particularly that there's maybe one or two people on the board who've got that strength from a finance perspective. How do we ensure that those maybe who don't have can ask the stupid question, if you like, because it won't be a stupid question. If it's their area of concern, they're still as responsible as those with more financial ability, and therefore they need the freedom to ask that question and get clarity.
Yeah. All right. No, that's good. In your view, what do you see as the biggest difference between a board that just focuses on financial compliance and one that focuses on added value? So,
I think the one that focuses on compliance is just missing an opportunity. If you think about the value of a board, well, there's a huge amount of experience on that board to help an organization grow. They have a fiduciary responsibility to make sure that everything's tracking along. Finance have got a role to ensure that the right data is provided. But actually, if the board can spend more of its time focusing on driving strategy and opportunity, it gives them a massive competitive advantage. So, I think if a board is focused solely on, I suppose it's governance, and from a controls perspective, it's missing a big opportunity. So I think that's what I'd say on that space.
Yeah, and I think and this is again comes to the finance person feeling that they're part of the strategy, and not just we're doing the finance part of the agenda and now we're moving on to something else. A lot of the things we see is we don't see people revisit strategy on an ongoing basis. So what's changing? Are our assumptions still correct? What's the trend on this? So actually, what if scenarios? Are there any opportunities that are presenting themselves at the moment with our competitors not spending as much or whatever it is, and that being an ongoing conversation versus a once a year, we've got to redo our strategy. So that's probably one thing I see a lot is people see strategy as a plan, and it's not a plan because a plan assumes that nothing's going to change. Nothing externally changes, and it's changing all the time. So, and I think finance being as you say, co-pilot. A co-pilot is someone who is helping you steer, in terms of the very definition. So as opposed to, looking backwards all the time, as you say.
I think the other thing is, if the finance team are providing future-focused data, it gives you the opportunity, the board opportunity, to react quicker. So if you turn around at the end of the year and go, we made an extra $1 million profit compared to what we thought, what should we do with it? Well, it would have been better if you'd known that was coming 6 months ago, because you could have got a 6-month head start. So how do finance predict what is likely to happen based off current performance and trends so that you can react to that? And that's on the negative as well. So, you're not sitting there at the end of the year and going, oh, we were $500,000 down on where we thought we were going to be. You could see that was coming, so you could react to it quicker. Because again, to me, it sets you up for success and the ability to be able to react quicker.
Yeah. What are some of the biggest mistakes you see time and time again when you come into organizations?
A couple of things. I think over analysis or over using too much analysis. I worked in an organization years back and one of the CEO's comments was always, failing to plan is planning to fail. So what we did was plan. We never did anything else. And therefore, that overemphasis on analysis, ultimately, at some point you've got to take a risk and you've got to step forward over the precipice and make a decision that that's the way you're going to go. So I think finance can be guilty of this and not wanting to take a risk. So again, going back and becoming the business prevention officers, there's got to become a point where you go, okay, well, based off what I can see, what I can tell, this is the right thing to do. Can we just crack on? The other one, and it's probably a little bit outside of the finance area, but is dealing with poor performance. If I think about people, the harm that an organization or can be driven into an organization by not having the right people on board is huge. And I think quite often there's the concept of, oh, we can't deal with that. We need someone sitting in that chair or sitting on that seat, a bum on a seat. And my view would be better no bum than that bum on that seat. And you need to deal with that, because I think the implications of that poor performance across the organization is quite wide. And I think you see that after someone leaves quite often. And I think generally you turn around and say, wish I dealt with that sooner. And it may not be exiting the person, but it may well be dealing with that person and ensuring they've got the right development plan and the right action plan in place to give them the support that they need to get to where they've got to. And then the final mistake is focusing on the past. The past is the past.
Yeah.
The past is only relevant in my mind to what it means for the future. So what can you ascertain from that past, whether it be performance of products or whatever, that will mean that you can actually improve your view of the future so that you can drive the organization forward based on that future. And we spend too much time in finance, in my view, is generally looking over. It's back to the rearview mirror comment.
Yeah. Got a couple of questions here that are linked. How important is it that non-financial leaders have financial literacy, and what does that look like? And linked to that is, what do you do if you have low financial literacy across the board or have financial ability concentrated in a few people?
Yeah, so I think that's another role that a role like mine can play. Is actually how can a CFO or a virtual CFO come into an organization and help increase the financial literacy of whether it's management or the board, in terms of what is important for the organization, what should they be focusing on, and what does it mean? And I think I do see that in boards that I work with, where there are one or two people that are relied upon to be the financial experts, whereas actually you don't need to be a financial expert to know the 3 or 4 things that are really important to the drivers of that organization and the areas that you should be questioning. What does the cash flow forecast look like? Where are we with our covenants and so on? There's a few questions. And similarly with the management, in my view, it's the role of finance within the organization to upskill the right people as well, to ensure that they've got the right capability, and talk through, well, this is why you should be interested in this. So we're going to provide you with some reports. Well, this is why you should be interested. These are the key areas you should look at, but make it easy as well. A 100-page reporting deck on finance to a board is going to confuse most people. Well, what are the pertinent points from that? And the challenge from a governance point of view, if it's in the board pack, you are deemed to have understood it and read it. And therefore, actually, maybe the finance element of the board pack needs to be more fit for purpose. What is it you need to be able to get comfort that the organisation is tracking correctly, that there are no areas of concern, without having 100 pages to look through.
Yeah, that's good. Another question here: how important is the balance sheet, and what are you typically looking for, both from a risk perspective and also from a value creation perspective?
Yeah, I think there's an article on my website which I wrote a little while ago about, is your working capital actually working for you? And I've sort of alluded to it before, that there is quite often a focus on the profit and loss account, whereas actually where you're going to come into as many problems. You may be making a profit, but you may not have no cash in the business because you're not focusing on the key areas within your balance sheet. And it will vary depending on the business you're in. If you're a business with a whole heap of inventory, well, if you've got money or cash tied up in inventory, you need to be aware of that. On the other side, you may be a service business, and I deal with one or two where actually their biggest challenge is accounts receivable. So they're owed a lot of money by their customers. And again, that's money tied up in the organization, or work in progress in professional services firms, where you've done a whole heap of work that you haven't even actually billed yet to the client. So you need to be aware of those, because those are the things that are going to drag the cash out of the organization that you could be using to help grow. So I'd say you do need to be focused on your balance sheet, particularly where you have a significant amount of working capital. There are some organizations which are predominantly cash. Whatever you sell turns into cash pretty quickly. But there are other organizations where there are one or two things on your balance sheet that you need to be aware of that could work better for you. And where you see organizations, you're pumping cash into the organization, you may have overdrafts to facilitate your inventory levels. You're not maybe managing your relationships with your suppliers to get better terms, to extend terms. So I'd say there's a lot you can do in your balance sheet which can help the organization free up capital to grow. And I think it's an area absolutely which a lot of organizations are not good at.
Yeah, that's good. And then at the moment, we've obviously got a lot of people going through tough times with, downturn, recession, laying people off, and obviously there's a need to, get balance sheet and the profit and loss in order. How do you balance that short-term need to sort of keep things in order with the longer-term, opportunities that may arise for investment? Because it's quite a tough one.
Yeah, I'd say it's a really good question at the moment, given what's going on in the economy. It will depend again where you sit in your organization and how robust and how strong your business is. What I would say is you're in business for the long term, not the short term, generally speaking. Sure, you may have shareholder pressures, but ultimately it's about creating long-term value for your shareholders or for your owners. And quite often we see a short-term approach which actually diminishes value over time. And what I'd say is, I sort of reflect, is a little bit like your KiwiSaver. You're not going to be drawing on your Kiwi, or some of you may be, but you're not going to be drawing on your KiwiSaver for a period of time. So you don't necessarily need to react to what's happening today. And if you can stay the true course, it's going to hold you in better, into a stronger position going forward. Yes, you may need to withdraw your KiwiSaver because of your circumstances, but if you don't, holding your line can provide better returns in the longer term. So making a decision on the short term now will potentially mean that you're not in a good position to take advantage of the turnaround when it comes in the future. So, removing staff that may be key to success in the future, or changing a product that could actually have a detrimental effect on your market share now, will not stand you in good stead. And I read somewhere that there was some really good analysis done around organizations that continued their investment or their strategigic approach to things like marketing, and those that in a downturn continued to spend on marketing exited that downturn at a more accelerated pace. So if you look over a 5 to 10 year period, their return to their shareholders was significantly higher than those that had maybe cut back on the short term to get through, or because they wanted to hit targets in the short term. So it's horses for courses, but I'd say where the value is going to come is staying true to your strategic aim if you can afford to do so.
Yeah.
And making, if you've got to cut costs, then fine, but doing it in areas that are going to have less impact on your strategic direction. And that's where finance again can play a role, which is, let's model this. What does it look like? Over a 5-year window as opposed to a 6-month window. If we make this decision, what could be the implications?
Yeah, that's good. And finally, one last question. So, what one message would you leave people with regarding the value a role like yours can bring to their organisation?
I'd say I think the word value is the interesting one. We don't come at a low cost, but we come at a high value, and I think organisations can look and go, well, am I going to get value? And the answer I'd say is you will release, through having the right role in this space, a significant value. It will give you a competitive advantage compared to some of your against some of your competitors. It will, I think, allow your board and your management team to focus on driving the business rather than in the finance space, and give that level of confidence to a board that you've got the financial side of the organisation, or the financial responsibilities sewn up. Yeah,
great. So what I've heard, really, I think some key things that you bring is about that initially, that listening, questioning, to really understand, what does success look like? Where are those frustrations? I think that can be a real, releases the red flags if you're seeing frustrations. What does success look like, as I said. The role that finance can play within the strategy, and not just thinking about the numbers and thinking wider about where did the numbers come from? How do I ask better questions around that? And building trust, I think that's the other one, which obviously allows you to ask better questions. It allows people to come to you for to bounce things off you and to do some of those scenarios. So yeah, and I think the other thing, looking at what the board needs, what the exec team needs, and making sure that you're not making assumptions or guesses as to what they need, but you're actually finding out. So some really, really good questions and really good insights, Paul. So really, really appreciate that. So thank you for your time and expertise. And if anyone wants to know more about how, if you want Paul's details, you can let me know. And also, if you want to engage us from a Government 365, we're all about that, helping you release your collective potential to drive more value. Contact me. So with that, we'll finish for the day. But thank you, everyone, and have a great rest of your day. And thank you, Paul, for your insights and expertise.
Thanks, Gerry, for inviting me. Thank you very much.
Cheers, everyone. Have a great day.